This is certainly not investment advice. If there's a banking crisis, buy technology stocks. If there's a war in Ukraine, buy technology stocks. Maybe even if China attacks Taiwan, buy tech stocks. Let's talk about the Apple report, another mega cap tech. Not a super great report, but the price action's good. DraftKings, derby time. A lot of people making some wagering. Lyft, not getting a lift. We got a lot of earnings to cover. We got Ryan Detrick at 8:35. He's going to bring us the stats. It's Derby weekend, folks. Let's get fired up. I got my American Pharaoh shirt on. This is pre-market prep on a Friday. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. I'm in a good mood today. We're looking at an up market for now. We're up 29 and 3/4 handles at 41.0550. Buyers just kept coming in yesterday. Every time we got to that 40, 70 area around last week's low, they just came in with a vengeance. And here we are, back over 4,100. Hard to find resistance today. We'll see what happens with the jobs report. The buck is down only 8 cents at 101.10. Bonds are down 3/4 of a point, 131 and 14/30 seconds. Crude back in the 70 handle, up a buck 92 at 70.48. Gold giving back a little bit of yesterday's gains, down 11.10 at 20.4460. Silver down 9.7 cents, but still in the 26 handle. And Bitcoin up $345 at 29,370. Triple D, kind of a rough start yesterday. Did you get out of the right side of the bed this morning?
But trying here. And yes, Chad, the Oilers have something to do with the mood for sure. I mean, Joel, you know how this is. Your team loses and you're just like, it starts the day off so badly. And it's struggled. You've struggled with this for years too. And I don't understand. Like my wife asks, why does it bother you that much? You don't know any of these people. You don't have any, relationships. You've never even met most of these people. I mean, why do you care so much? And I was like, I can't really answer. I don't know why. I just do. I mean, I cheered for this team since I was 5 years
Panthers!
old. I just do. See, and I'm not a Leafs fan, so I don't care about the Panthers. And, Dougie Sifu, we'll give him a shout out, but, his Panthers are doing pretty good. But so I'm an Oilers fan. So that's why I definitely was ticked off that they lost the first game to Vegas. They don't play till Saturday, so I'm starting to feel a little numb to it. But you're right. The sports impact your mood, man. Doesn't it with you too, Joel? Like when Michigan loses, isn't it just like it ruins weeks for you sometimes, doesn't it?
Well, I've matured over the years.
Yeah.
That is
a lie.
Seriously. No, it's not a lie. If Lisa was here, when we first met and we were dating, and even when we were married, she would never make plans on a Saturday of a Michigan football game. Because if in fact we lost, I was just a miserable person to be around. So she would spare people, okay? And then came the Rich Rod and the Brady Hoch era, and that just kind of numbed me. It just kind of numbed me. And then after that big losing streak, and then I was just like, the only thing I wanted to do was beat Ohio State before I died, right? And we beat Ohio State twice in a row, and that. So I still got my season football. I still got my season basketball. I'm still tied to it, with my daughter being a fourth generation. But I just like, I can't. I've grown up, Dennis. I'm getting to be the age
I find
where,
that hard to believe.
yeah. I mean, I'll still, slam a table or get
He'll still get
upset and
physically violent when his team loses,
no,
but
no,
he's
no, no.
matured to a certain
Mentally,
extent.
he's not breaking stuff, just physically. That's
Yeah,
okay, guys.
yeah,
Yeah.
yeah.
All right. Well, I'll
Do you
reel
break
them in,
stuff when your team loses, Mitch? And when the Dolphins lose, do you break stuff and throw things around?
No, because I usually hedged my bet and I bet on the other team at some point.
That's not a bad idea.
Let's
I wish I could
go.
do that. I wish
That's
I
not a
could
bad
do that.
idea.
I
Hedge
wish
that
I
bet.
Should
could
we
do
go?
that.
That's a great segue to DraftKings too. Here, like this guy is like smooth.
Let's
He's
do
so
it.
smooth. He's
Let's
like, how can I
go.
bring this back in? I'm gonna hedge my bet, and now I'm gonna bring it over to DraftKings here.
got to.
Money Mitch with the segue of the year. DKNG, talk to me about it.
Let's take a look. EPS 87-cent loss beat the 88-cent loss estimate. Sales of 769.65 million beat the 704.13 million estimate. They did raise fiscal year revenue guidance to a high end of $3.05 billion to now a high end of 3.235 billion. The important part, I think, is definitely seeing their EBITDA guidance now going further and closer to EBITDA positive. They lowered it down now towards only 290 million in the red, but they are pointing that they're leaning towards profitability and that's kind of their focus right now. I think it's going to take a while for them to get there, but as you guys can see, they're getting a little bit of a lift and getting the love again.
The technicals look good here, though.
Mhm.
It's turned around. It's stabilized. It's had a really good year breaking out here again. Again, I don't like buying, the breakouts here. But, on a pullback here, this $20 level is now massive support because this was resistance back in July of 2022. Earlier this year, we kind of stumbled there. Now we're back up and through it and holding it well. Now you get the good report here, Joel. I think
you know what? This chart's looked good for a while, and you know who's probably Rochambeau? Sean Udall. He's been bullish this stock for a long time. Yeah, he's really like this one. I'm looking. I mean, it's a big move, and it ran into the report. These things keep going just like Shopify. So I don't want to, say, hey, that 24 and a quarter is going to be the high of the day because it looks like you're bid right up there. But I'll go down to the monthly charts, and you're making a new monthly high, right? So I don't know, $25, maybe a nice round number. Your next monthly high comes in. There's a pair of monthly highs between 24.73 and 25.01. So that'd be another target. I don't know about today. But before we go away from this, I'm gonna do my derby pick on the closing print. And if there's is there any horse fans out there? Nick Bellucci, I know you're a horse fan. If there's a horse fan that wants to join me on the closing print, then send me an email, joel@premarketprep.com, and we'll do a little 10-minute segment because my pick is kind of boring. But I'll be doing that on the segment.
Who's the favorite?
The favorite is Forte.
And is this Forte? Does this horse have any chance of a triple crown or anything like that?
Dennis, you have to make it to the closing print to get the good stuff. Come on, man.
Right,
you know this.
Talking it.
You know this, man. Come on.
I wasn't listening again.
Can't tease it and then give the good stuff.
The horse talk starts, and then my eyes start to go a little sleepy here. I'm not a huge fan of the horses. I try to respect it. Kentucky Derby's always fun, though.
Yeah,
you can't beat that 90 seconds, right?
It's the most exciting 2 minutes in sports.
No, it's 2 minutes. That's 90 seconds. I don't even know.
Of course, and I'm sure there's going to be some betting going on this weekend.
What time is 6:15? What time?
No, man, they're making it late. They're making it like 6:55.
6:55.
I know.
Nighttime
All
race.
right. All right. Well,
that means you do a little, tailgating in the morning.
Nick Bellucci says he has stage fright. So if there's any horse lovers out there, then send me an email, joel@premarketprep.com, and we'll get you on for a few minutes. Tale of Penn. I just want to mention Penn here.
Yeah, sure. DraftKings versus Penn. Franz knows it.
Yep. Bad news yesterday. I don't know what to say. Your pair traders probably got either had a really good or really bad day. And then just mention Churchill Downs here, man. That stock's been firing on all cylinders, up 40% for the year. big earnings beat. They own a lot of tracks, a lot of casinos. So there you go. I don't know what. I'm sure Benzinga has some stocks related to the Derby, but looking forward to it. Looking forward to the Kentucky Derby.
It's
But
always fun. It's always
yeah,
fun. Like you said, it's only 2 minutes, so I can stomach horses for 2 minutes.
Just be smart, man. Get all the free money you can. That's what I always talk about with these sports betting
So
plays.
is this a big like weekend for
Free
DraftKings
money.
then? NHL
Yeah.
playoffs, the
Oh, yeah.
Derby.
Yeah, it'll be
Is
free money.
DraftKings a Derby stock?
Yeah, definitely. People, yeah, you can wager on that. I mean, there's a lot of different sites that you can do
Yeah.
horse wagering, but I don't know. The sports it seems to be making a little bit of a comeback. Now with the online gambling. But hey, we can't go 11 minutes into the show and not talk about Apple.
Oh, of course.
All
But
right,
what
do
we
it.
did is we let everybody come in because you know how they kind of leak in the morning. Well, guess
Yeah.
what? We saved it for you guys out there. Let's get to Apple's earnings here. Q2 EPS at $1.52 beat the $1.43 estimate. Sales of $94.8 billion beat $92.96 billion estimate. Now let's talk about the different segments. iPhone revenue came in at $51.33 billion versus $48.84 billion expected. Mac revenue, though, at $7.17 billion versus $7.8 billion expected. iPad revenue also down $6.67 billion versus $6.69 billion. And then when you look at their service revenue, $20.91 billion versus $20.97 billion expected. So they only really beat on the iPhone revenue. And that was a stronger than anticipated iPhone sales, yet overall sales falling for the second quarter now. And then if you look a little
Lower
deeper,
guidance, or
also
lower
in the
bar.
earnings, Apple's finance chief, Luca Maestri, said that the company is facing macroeconomic challenges in digital advertising and mobile gaming, which is part of Apple's services plan. Of course, keep an eye on it. We'll see what happens. iPhone revenue increased 2%. Mac sales were off 31%. But then, of course, announcing a $90 billion new stock buyback won't hurt.
Financial engineering, Joel, always works.
Yeah.
Although with Chevron,
the report wasn't that great. Let's just be honest. It wasn't that
great in the call, too. And Gene Munster, a buddy, obviously of this show, friend for a long time, listened to the call. And he said that he didn't like what they were saying on the guidance. So I didn't listen to the call. I was trading banks, trading other things. But, I mean, Gene Munster says he didn't think the call was that great. The guidance was that great. That kind of spooks me, too. But, regardless, stock's trading higher. Buyback here. The algos are all over Apple because they don't want to sell the S&P off. So if you sell off Apple, you got to sell off the S&P. So stock continues to hold up well.
I think there's two things that are contributing kind of to the up move here is because you had the street leaning the wrong way yesterday, right? Qualcomm comes out and says, "Oh boy, yeah, we lost. We didn't have a good quarter because of lower iPhone sales." So what do people automatically think? Oh my God, it's Apple. We got to sell Apple. So Apple was down yesterday. Also, and I just caught it out of the corner of my eye. Goldman Sachs came out with some bearish call on iPhone projections. I don't know if that came to fruition or not. But man, this is just just a strong. It seems like they almost never miss. For right now, you did get a bit over 171. 171.47, but I think my focus right now is right where we're trading. We're up 409. And what do you got? You got three highs in the same area right here, 170.50, 170.60. So respect that as resistance. I don't think this is probably came anywhere near the straddle price, or I don't know where they had pricing
It
on
wasn't
this one.
high. We looked at it. It wasn't as high as you'd think. Like I think it was more than $4. But let's go look here. Just for fun. Let's see how well they did.
Yeah, I think it
We
was
know our buddy
like,
CC looks at this all the time, and we did the lesson on it the other day. So let's just look where Apple was. Somebody in the chat might have it before I grab it because for whatever reason my software is not opening here. Hello. You know what? I'm going to tell you something. I've been an Intel fan for a long time. I've bought Intel processors. But I'll tell you, this new computer I got, it's not any faster than my older one. I'm going to go to AMD or NVIDIA. I'm switching next time. So Intel, You've lost me. I've been a 20-year customer of you here, and this computer is slow sometimes. And I'm like, I don't know what the hell's going on here. It
How do you
shouldn't
know?
be.
How you know it's not your internet?
Now the internet's because the internet's fast. The internet's always fast. I never have any lags or anything. I'm on, the internet is quick. It's not the internet because I go on even on my cell phone. It's fast, fast, fast. It's this computer. It's this new
Yeah.
computer. It's brand new. I bought it because my other computer was a little bit slow. Sometimes it's really zippy, and other times it's just not. So you know what, Intel, I don't know what they're doing, but that's whatever they're doing it wrong. $6.80. $6.80 was the straddle. So definitely straddle raiders losing here once again.
All right, we'll
Or
see what
straddle
happens
buyers,
with
straddle raiders making money.
We'll see what happens with Apple. Of course, we did get some regional bank talk. Let's maybe go to that really quickly before we get off of that. Let's take a look at the question now that I had to ask you guys. Will the FDIC save the regional banks? As we're getting a report, of course, by Bloomberg that the Federal Deposit Insurance Corporation may exempt smaller banks with assets below $10 billion from contributing to its deposit insurance fund. Some lenders with $50 billion in assets could spread out the payments over 2 years, while the bulk of the bill would be footed by bigger lenders, the report said. This, of course, is a stance towards smaller lenders that could raise hope that the government will handhold the regional banks if the situation warrants. So what do you guys think? Do they step in and just save the banks here?
They've already been stepping in and saving the banks.
Yeah.
I mean,
Yeah,
the FDIC is coming in, and if you look at your fine print, you're not insured for as much as they were insuring at Silicon Valley Bank, obviously at these other banks as well that have failed. We've had 4 of them fail. So the FDIC has been coming in and bailing out these banks already. They won't call it a bailout. They say, oh, yeah, JP Morgan came in, and it was a deal. But we know JP Morgan just took all the good stuff and left the taxpayer with all the crap. So, I mean, they're coming in. They're going to be – and unless, we have a dramatic change in Fed policy here, which doesn't seem to be that they're, going to be doing it anytime soon. I think there's going to be more bank failures and more FDIC to come in. But, I mean, they got to do something, trying to get the vote of confidence back, trying to do something here, and that's what this is doing. So you're getting a nice little rally in the regional banks here today. The problem is every time these things rally, it seems like it's short-lived, and then you get another headline. And obviously, there was a fake headline yesterday from WAL, but the PACW headline from the day before was not fake. Nice bounce here. But would you want to go, once bitten, twice shy, right? Do you want to go buy PacWest, WAL, or any of these banks right now with your investor dollars, knowing that the FDIC is lurking? And if there's a problem, they just step in and they wipe you out? I mean, your deposits are fine, but that doesn't mean your investments are fine. If you own PACW bonds or shares or preferred stock. So it's tough to just come in here. And, people are blaming short sellers, but what I think is it's investors just saying, hey, I don't want to be any part of this because I saw what they did at Silicon Valley. I saw what they did to FRC. I don't want to get wiped out either. And that's the main reason these stocks are selling off.
These are if you're playing these, if you're a buy the dipper and you're whatever technical system you have, or not hold them overnight, and then you get this kind of news. I mean, yeah, I think you automatically have to ring the register, because you don't know what the next headline's going to be. And so for these, I would just go through them. I'd look at the pre-market high right now. For WAL, it's trading right at the highs of the pre-market session. Just made a new high there. Look to yesterday's range. I don't think you're going to see 26.74, right? I mean, that's way up there. I don't think the news is that good of news. So, keep an eye on your pre-market high, and then let's look at PACW. Let's see if that can get back to yesterday's range. That's looks like it's running a little trouble at $4. Yesterday's high was right at $4, 4.15. So you got your bogey there. And who else falls into that category that we want to take a look at?
There's 112, I think, banks in the
112,
KRE. But yeah, the ones that were really ugly yesterday, like MCB is another one, Metropolitan. There was about 5 or 6 that were down 20% or greater. So Zion Bank was down 2. It's getting a nice bounce today. Actually, I do have an upgrade. JP Morgan's upgrading it to overweight. That's a call. I mean, that's like a gutsy call. You know, you don't often see these analysts bucking the trend contrarian style, but they come out here and they upgrade it to overweight here today. Obviously,
Yeah, I don't
they're
think
saying that
anyone's
this
going to take
bank's
that
not failing.
serious, right?
The one thing is the risk reward. The risk is zero. That, you know, you just pick the wrong one, FRC, and, you know, you get wiped out. The return on these, if they don't fail, is enormous because a lot of these things are ridiculously, you know, like sold off that if they don't fail, there's just as cheap as you're ever going to buy these banks. But the problem is we don't know which ones are going to fail and if there's more. I just don't think it was done with FRC. So that's why I don't want to bring my dollars in here and take a chance. But JP Morgan taking a chance on Zebra ION.
Wall was wicked. Did you guys see that move? I don't
headline
know
was
if you
wicked.
watched it. When it came from like 11 something up to 18 in about like 2 seconds and halted.
Yeah. Well,
That
that
thing
was
was
when the company came out and
ridiculous.
said that the headline was absolutely false. So if you didn't hear the story yesterday, Financial Times reported a story that WAL was looking for strategic options. Looking, you know, obviously like that's the same thing. Like we're nervous about that they've got problems. WAL came out and said that was completely false. Basically said they were going to sue Financial Times for printing that. And that's when the stock had the big pop up. And it's come back since then and obviously up 20% here this morning. So they're saying they are not in trouble, not looking for strategic options. You know, we don't know what's really happening behind the scenes, impossible to tell. Obviously, somebody probably got in some big trouble from the Financial Times on that article there because it obviously turned out not to be true. But you look here, stock's bouncing. Again, though, there's a lot of risk. There's risk reward, though. A lot of reward, too. These stocks don't fail. You look back, Joel, I mean, you could be back at 5 years.
Yeah,
I mean, be back at $80 if it doesn't fail.
Yeah, you look at going back to the financial crisis, right? I mean, it's just when you're caught up in the middle of it, right? It's like, oh man, you know, I don't want to buy anything. This is, you know, they're all going to
So
zero,
hard.
and then you look back 5, 10, you know, 50, or look forward 5, 10, 15 years, and you know the things pass. I mean, this is
they don't always pass is the problem.
Right.
So you had to pick them right. Because in the financial crisis, Citigroup never came back. Bear Stearns, you lost it all, basically. Lehman Brothers, you lost it all. It's like you had to pick them right. Goldman Sachs came back. Morgan Stanley came back. JP Morgan came back. AIG never came back. So you had to pick them right. It's the same thing. It's like a pick 'em. You know, you got to like go and like some of these are going to survive. Some of these are not going to survive, in my opinion. So, you know, you pick them and you hope you pick the right ones. You could do a diversified portfolio, but then you might as well just buy the KRE. So it's right now I'm sitting on the sidelines waiting for more information. The way I traded these and I played these in my investment account back in 2008 was I bought the preferred stock and shorted the common. And you've got to make sure, like, I wanted to see the preferred stock down 80%, the common stock down 80% from the highs. And then that play made sense because in the event that they go bankrupt, sometimes the preferreds don't get wiped out. In this case with the FDIC, everybody's getting wiped out, so it doesn't even matter. And I don't know if that's the play or not here. But, you know, one thing to consider in the event of a bankruptcy, and none of these companies that went bankrupt, they've been, you know, just taken over by the FDIC, completely different story. In the event of a bankruptcy, the preferreds are ahead of the common. But, you know, in the event of the FDIC stepping in, everybody loses that's invested in the company.
All right, let's go ahead. Let's bring us to Coinbase's earnings now. Let's take a look at Coinbase as they reported their earnings. EPS had a loss of 34 cents, beat the loss of $1.36 estimate. Sales of 772.53 million, beat the 649.44 million estimate. They do see Q2 subscription and service revenue at 300 million. In the first quarter, Bitcoin represented 32% of trading volume. Ether represented 24% of trading volume. And there was a comment in the earnings. There is no doubt that Coinbase is in a stronger business position as a result of these efforts. We say this in retrospect of the Wells notice we recently received from the SEC. We see this as an opportunity to continue pushing for a clear rule book in U.S. for crypto regulations, the company said.
Looks sleepy, street leaning the wrong way into the report. You had 3 lows in the same area. So you had an area where, you know, you could have leaned on a little bit of dip and they took it out. That's past history now. I'm just going to look at where the pre-market high is, and what I like to see when I look at a pre-market level. Pre-market high is 54.27. And what do you have here? You have a pair of highs just right at that area of 54.50. So gets to that area, you look another buck higher to 55.72. If this starts to go into retreat, the top of yesterday's range was 50.47. I'm not sure you're going to get that low in today's session, but Street kind of leading the wrong way. They've been selling hard into the report, getting a little pop up. We'll see if people want their money back.
All right, let's go to the next one. Surprising one also. Let's go to Carvana. Q1 EPS at a loss of $1.51, beat the loss of $2 estimate. Sales of $2.61 billion, beat the $2.60 billion estimate. The focus on profitability really can start being seen in the numbers now. Inventory was down 21%. Advertising spend was reduced by 64% year over year. And given by the CEO, the first quarter was a big step in the right direction, and there's more steps to come. Given our strong start of the year, we expect to achieve positive adjusted EBITDA in Q2 in 2023.
It's just a call option. The stock is a call option, a $10 call option here now, because it's a zero or it's not. And, we don't know, like obviously the speculation, the bonds, looking at those prices are not good on the Carvana. There's been a lot of speculation that Carvana is going to go under, but you know what? Hey, here we are almost a year later since they've been talking about this and it's still alive. So that's good news. And the report is good news. I'm not playing it just because it's too speculative.
Big pop, 44%. So if you were playing into that sleepy area between 720 and $8, not sure what your risk, what you were risking on it, not a bad report. I guess your risk was zero. You got, if you're looking for 1050, it's just sticking out like a sore thumb to me. The reason is it just splits a pair of highs from April 11th and April 12th. Right in the middle, 1086, 1032, call 1050. So they're coming back on the downside if they start to sell this thing. Better hold that psychological $10. The top of yesterday's range is 743. So there's a ways to go. Do we have is this igniting any other meme stocks, Dennis? Or is like the meme crowd just kind of tired out? Like AMC AMC had earnings.
Yeah, AMC. Did they report yet?
I was looking at it. I didn't have it before. It probably might have came out now. Yeah, it came out now.
Slight beat. They lost 13 cents, supposed to lose 16 cents. Sales slight beat, 954.
Yeah, slight beat, not much there.
Yeah.
I don't think
what's
it's
happening
even
with
worth
the ape
talking
thing?
to.
Does anybody
it's
know?
It's not worth talking to, man. It's nothing there. Nothing there.
What's happening with the ape thing? Do we know? Like, is that?
I just
remember they were
going
to merge them together, and like somebody in the chat must follow that story. I don't follow it closely enough.
Yeah, I don't follow it at all.
But I'm just wondering if that ape merger is going through, because it sure has how the price don't look like it. Remember they were going to merge the two together, but ape's $1.60 and AMC's $6.14. I know some people were talking about like the two of them coming together, so I'm not sure.
I still like Cinemark way more than I like AMC, and if you look into
don't say bad things about AMC.
I'll do it again.
You know what
Cinemark
happened?
over AMC.
Oh goodness,
Cinemark
you're getting hate mail now.
AMC.
I learned my lesson. I never say anything bad about AMC.
Mitch BZ.
I like going to I went to see Air last week, a week or so ago. I like going to the movies. I don't know if it's
Mario.
I don't know if it's a profitable business or whatever. I know
Jobs is coming, you guys.
Yeah. You got
all
45
right,
seconds.
Let's do
it. All right, let's go.
All right, team. I got you guys right here. Of course, I'm bringing up the Benzinga Pro for this, guys. Let's take a look. I was just on this right here. Let's go to the calendar here. Have it already. Non-farm payrolls consensus is 180,000. Prior was 236,000. We're going the wrong way, at least for non-farm payrolls, because we're expected to get a jump, right? That's what Powell was talking about. He's looking for the jobs number to keep getting weaker. Unemployment rate, 3.6 expected. Prior was 3.5. So I think going in the right direction here, if we can get it above 3.6, we'll find out as this comes in.
Yeah, we will. Will bad news be bad news or bad news be good news?
That's the hard part, right?
Good news be bad news or good news be good news? Let's see here. We've had a spike higher, a spike lower. Is it coming?
All right, non-farm payrolls, 253,000 versus 180,000. That's going in the right direction, at least to show weakening labor markets. Unemployment rate now at 3.4 versus 3.6. Prior was 3.5. So mixed signals again. We get a
Again.
decent one on the non-farm, and then we get a kind of conflicting number there on the unemployment rate for April.
There's a theme going on, and it's mixed signals and everything here.
Yeah.
So I stayed on with you guys. I was going to get off, but I thought it wasn't going to move. Now I'm going to have to leave you if it keeps tanking like this.
Yeah, I mean, definitely taking a downturn here. There's some other numbers. Average hourly earnings year over year, 4.4 versus 4.2. So we're seeing average hourly earnings come down a little bit here. Unemployment also got average hourly earnings at 0.05 month over month for April versus a 0.3% expected. Of course, there's a ton of numbers coming in here. So maybe one's affecting more than the other. Of course, you guys are seeing the market kind of digest that right now. What are you seeing, Joel?
Well, we just nicked the pre-market high. We made a new high by just a tick, and it's an interesting area. It's Wednesday's close. It's also the area of a double bottom from Wednesday and Thursday. So the onus is on the bulls, clearly on the bulls to establish a bid above 41.05 and just go for yesterday's Globex high. Right now, that doesn't seem to be happening. But it's just, man, it's just mixed signals. I mean, they can't, but I mean, all those numbers, Meta laying off 3,000, 5,000, Amazon, this, that, and everything, and unemployment goes down to 3.4. I mean, your Fed pivot, man, it's not coming soon. I think they're going to.
The only way the Fed is pivoting is if we get a pile of bank failures coming at us. That's going to cause your Fed pivot and it is an if we get more bank failures, and I mean like they start failing left and right, then you're going to see a Fed pivot.
And they'll be late, though, right? They'd be late if that happens, right? Because you're talking about after the failures already happened.
They're always late. That's how they operate. Late. They're always late to the party. They were late to raise, for so long. COVID was over by a long shot, and they were still lowering rates. I mean, that's what caused all the inflation. They're always late.
Yep. It's just and also like this little sell-off here. I mean, maybe you could get excited about it, but just think about that, the fluff that you had in the market here from from the Apple report.
I mean, it really wasn't there. There's nothing there, Joel. I think they're going to sell this thing off.
It doesn't matter, though. The market's still
I'm not saying
rah-rah.
I don't care what the report is, Mitch. They took the market up on it.
They took it up.
Yeah, whatever. The market's smarter than me. They like the report. They took the S&Ps up over 4,100. Slowing. I mean, they still make a ton of money. Yeah. They're doing a $90 billion stock buyback. They raised their dividend.
Oh, yeah.
I mean, it doesn't sound like it's a weak company to me. I mean, it's just, it's the bottom line. But I think today's an important day because if we give back these gains for today, then I will put a double fork in my high for the year. If we give these, like they had me teetering. We were up there at 4,200. Yeah. I mean, we got up there. They sold it off. They defended last week's low. We're still nowhere. We still got no clarity. We still, we don't know. We don't know if inflation's beat. We don't know if the economy's slowing. And all these people that are so convinced that we're going into the recession, well, tell DraftKings that, tell some of the, it's just people are still spending right now. People still have jobs.
They haven't stopped spending. And that is a good point. Let's go to do you have the Fed tool? Because CNBC was saying something yesterday here, Mitch, and they were saying July expectations are for a Fed cut. And I'm like, are you kidding me? June, July, 2 months from now, the tool is expecting a Fed cut? I mean, the only way that's happening is if we get a lot of bank failures in the next couple of weeks. And it might happen. Like that could happen. That's the path. The path to Fed cuts is a lot more bank failures. That's the Fed path to the rate cuts happening here.
All right, I'll kind of show that right here. I can show that. Here it is. There it is. And so you can see here too? Total probabilities. I can see here as you're starting to get there. The June meeting, there's about a 1.48% chance. The July meeting has 49.12 of a cut. Yeah, and then you get to September and it's 88.81. And then if you're in November, they're like, yeah, we've cut. We've cut.
What is going to cause them to do that, though? That's what the reason for that is: one, bank failures all over the place, or two, a recession. None of that is good for stocks.
Yeah.
So everybody that's just gravitating to like the Fed's going to cut. Yeah, baby. We're getting free money. Bring back the punch bowl. There's a cost to getting that punch bowl back, and I don't think the market's going to like it.
We'll see what happens there. I'll tell you what, I know there's someone in the back that would love to kind of come in on this. Let's go. Let's take this down and let's get to our interview today. All right, Ryan Detrick, how we doing? Chief Market Strategist, of course, Carson Group. How we doing today? It's always good to have the stat man in the room. Let's get to the action. What's going on, Ryan? Talk to us.
Hey guys, good morning. You hear me okay, loud and clear?
Loud and clear,
Perfect.
Man.
So yeah, I mean, I got some slides I want to share, but you brought up some good points. I mean, we were looking at Fed fund futures. Work with a gentleman named Sonu Varghese on our team, our global macro strategist portfolio guy. Anyway, long story short, Sonu was saying the Fed funds futures looking for 325 basis point cuts before the end of this year. Now, believe me, you guys were looking at these with single cut, but there's really some. At least this was as of 2 days ago. There are some real chances of that. I maybe shouldn't say chances because we're in the same camp. We don't see it. I mean, I guess the answer, we're not so sure there's going to be that many cuts here, but it's really unique. Now, I'm going to try to share my screen real fast here. If technology works, give me 1 second, guys.
Let's do it.
Let's see here. Window. I think I'm there. Here we are. Boom. That should have worked. We good?
Yep, I'm getting you up right now. There you
so
are.
I share I look at the decks I've used with you guys before, and I've used this one like first every time. So I was like, well, let's do it again. Just the idea that we were in a very bullish seasonal time period last quarter, the first quarter of last year, and then the fourth quarter of last year. You can see where we are now. Year three, second quarter is still decent. But again, it's kind of getting to the point of this. This was the sweet spot. As we know, we had a 7% rally the fourth quarter last year, 7% rally the first quarter this year. Now we're kind of, we'll see where we go. But there's definitely some, there's definitely, seasonality is still kind of there, but it's kind of near the end of that real sweet spot that really played out. I know I came on with you for a while saying, listen, October looked like a legit low. Be optimistic. Not many people said that. We upgraded our view on equities at the Carson Group, in late December. And we are still overweight. Now we're potentially going to add a little more bond exposure. We've, like a lot of people, we've been have short duration. We're maybe going to add a little bit, not because we think the Fed's going to cut, because we do think they are kind of near the end of at least the rate hiking, which I've got a stat on. This is what I've shared with you before. It is what it is. A bad year with an up January. Just kind of be aware, big up January, that the full year historically has done well. Just something to think about. This is another one. When you have a really big first quarter, 7% gain, the full year has never been lower. Now, I am aware that some of these times stocks actually go down the rest of the year, but you can look at those numbers. Normally, knock on wood, after a pretty big first quarter, there is some follow through, and in some cases, a good deal. Now, maybe we'll skip that. This is interesting. I think, debt ceiling. I mean, believe me, I get to work with over 350 advisors every single day, and their clients are asking about the debt ceiling a lot. So I looked it up. 89, which is a Fibonacci number last I checked, right, for people on this show. 89 debt ceiling hikes. Every single president, Republican, Democrat, split the House, a whole Congress, whatever. Debt ceiling increases are perfectly normal. So, yeah, this might cause some volatility, but we don't think this is going to be anything different than before. It'll be the 90th increase. And it's just, like the Carter, he had 9 of them, I think, all in 1 year, which I thought was interesting. It was the most ever for 1 year. But anyway, so you can see President Biden's only had 2. That's the least for any president, going back to Eisenhower. So it is what it is. I know more traders on this show, but just that idea of some volatility, but I don't think we should get too worked up on it. So a couple more that we can talk. Last hike, right? Is this the last hike, or was this the last hike? I mean, we think a good chance it probably was at this point.
I think so too.
What does that mean? Well, it is what it is. I went and looked at the last 10 hikes. the returns are pretty solid. Then a year later, you're up 8 out of 10 times. So I loved your guys' conversation before I came on, and we're in this camp. It's when the Fed starts cutting. When the Fed starts cutting is when you probably should run for cover. Yeah, we've got this inverted yield curve. Yeah, there's parts of the economy aren't perfect, but once they start cutting, that's when you have a recession. Look at the last 3 recessions, guys. When the Fed started cutting, we were in a recession within like 3 months. Okay, so that's something we're actively watching, and we are still more optimistic. But if the Fed were to start cutting or looking to actively do that, yeah, then you might have to change your tune. But just because the Fed is done hiking, they could leave things here for a while. That's been our base case for a while, that they don't cut this year, but leave things a little higher. That can be where we are. Sell in May. Everyone knows about it. You probably had guests talk about it. I'll just gently touch on this. Yes, it is the worst 6 months of the year on average, 1.7% May through Halloween, right around my birthday time. But then if you're up for the year going into it, things do fine. You can see it there, up 4% on average, up 3 out of 4 times. It's times like last year in a midterm year when you're down heading into it, when there are some different things taking place, you can slip on the banana peel. Well, clearly that's what happened last year. Now this year, again, there's lots of other factors out there, but just blindly to say sell in May, no, when you're doing okay into it, you can be all right. May's higher 9 of the last 10 years. And I know, that's like betting on red and black at a casino. I get it. But just be aware that, May has been strong for some reason lately. I talked about this last time. Maybe then I'll stop talking here. Gold, we did
love it.
Gold and some of the tactical models we have. We're not huge gold bugs. We're not into worlders. But I'll tell you, when we see like what's going on with real rates and I see a chart like that, that's something that, we've got a small exposure in some of the models we run for our advisors at Carson Group with a little bit of gold exposure. And if you look at gold relative to like TLT or bonds, I don't have that chart, but you guys know what it is. It's breaking out the highs, right? And believe me, we think you should have fixed income in a portfolio, but we think maybe a little bit of bucket of gold makes some sense in portfolios. I think this is my last point. Back-to-back 5% quarters. I know other people probably talk about this. Maybe they cited me when they did it. But historically, you can just glance at that. Normally, stocks don't get killed after 2 back-to-back quarters of 5% or more. But if you look at the numbers, it's up 14% on average a year later. This would still be as of, the end of April or so. No, end of March. My bad. End of March is when this clock would start. Up about 87% of the time. So just some factors to think about. I think that yes, things aren't perfect, but we're still optimistic that stocks can kind of continue to go higher. And I know I'm saying stocks, there's some going up and some going down. I'm very aware, but overall, we think there's still some opportunity for investors. So there you go. I said a lot.
Holy.
Not a lot. So hopefully
so much information from the stat man. We love having the stat man on the show. And and I look here and I just want to gravitate to what you just said at the end. I mean, some stocks going up, some stocks going down. And that is what we have, is like the tale of two markets. S&P very resilient, Q's in a full-on bull market here. And then the IWM, whether it's the banks or it's just that small caps just aren't loved, is like in a full-on bear market here. When's the last time that we've seen this kind of divergence from like the Qs to the IWM? Because if you look at the last month, Qs or last month and a half, 2 months even, Qs straight up, IWM straight down. Do you have any information on when we've seen a divergence like that? Because I just don't remember, and I traded for 22 years, but I don't remember a period where it's so much, in individual days maybe, but overall this trend of straight up in January from the Qs and the IWM sitting below the January lows. Right. I can't remember the last time that happened.
That's a great question. I can't either, unfortunately, but I mean, it is unique. And, one of the other things, I didn't put it in here, but, you look at advanced decline lines, right? The Dow advanced decline line, they made like a new all-time high last week. The S&P advanced decline lines flirting with going higher, but clearly, small cap AD lines and things are breaking down. And it is a very, very unique situation. I will say this though, from I'll use the F word if I can use the F word on here. From a fundamental point of view, we do think right here and now, small caps make sense. I mean, small caps are, I don't have the chart, but we all have seen it. Small caps are at the bottom of that range there. If you don't think you're heading into a recession, that's been our base case for a while. We still see a strong consumer. We see positive, and just today's jobs number. Once again, I guess they revised the previous month lower, but still, we just don't see a recession. And I'm aware of the financial crisis, or not a strong way to put it, the banking crisis, but you look at spreads and things like that, they're higher, but they're not saying the end of the world is on the way. But you got gold going higher and you got some of these risk on things. But still, we think right here and now, for someone who's looking the rest of this year, going out a year, we think small caps do make a lot of sense in a more tactical portfolio that says the world's not going to end. And if this banking issues can be resolved, and believe me, I have no idea there, but it's unique what's happening clearly. But still, we think there's some opportunity there.
the value is there in the small caps for sure. I mean,
Yeah.
compared to some of these other stocks like Microsoft trading 31 times, Nvidia 60 times, Apple 26 times. I think the last time I was looking, the IWM was like 15 or 16 times. It might even be less than that now. So I mean, you are paying less, but then you get the concerns of what's happening with the regional banks, and that might impact lending. And we have a lot of smaller companies that might depend on the regional. So I can see the narrative to sell that off, but I've been kind of nibbling on the IWM a little bit in the long-term account because I feel like there's some value here too. What else do you like here, Ryan? Like, you like gold, obviously there's certain sectors. What else? What other sectors do you like here?
Yeah, I mean, I'll tell you, healthcare is one we've been warming on a lot. I know, biotech is reasonably strong. I kind of like healthcare because it's got some defensive nature to it and some offensive nature to it. So that's one that we see some opportunity. We actually just downgraded value in some of our tactical portfolios and in our house views at Carson Group. And again, we're honestly right now, Dennis, we're kind of getting a little more even across the board. I mean, it's not like there's anything jumping out at us necessarily. I mean, we are still overweight industrials. We do think energy right here and now. I mean, energy's been hit hard, as we know. But kind of that theme of if you don't see the end of the world, there can be some opportunity. Energy stocks are up, 50% 2 years in a row. XLE's at the top of that range. So right here and now, those are industrials and energy are two that we definitely think has some opportunity. And more even weight communications and technology in general. But then again, on the other end, on the fixed income side of things, we're actually looking at potentially adding a tad of duration, like a lot of people last year. We were very very low duration, which worked. Obviously, worst year for bonds since I think George Washington was the president, according to our friends at Ned Davis. But we're potentially going to add a little bit there. We also like high yield and junk. If you don't think the end of the world's coming, then those are some areas that maybe can provide some opportunity as well for a diversified portfolio.
Yeah, I can confirm this is the worst year for bonds since George Washington.
There you go.
I really took a hit that year on my bond portfolio. So you're talking small caps, you're talking the IWN, you're shifting out of value a little bit. And I'm looking at the growth stocks, and I'm looking at, ARKK, really just kind of hanging out really near the recent lows of the move. If there's going to be a changing interest rate environment, I mean, theoretically, that's been good for some of the growth stocks. Is it time to get on the Kathy Woods bandwagon?
Well, we actually just added Kathy to some of the stuff that we do with our investors. So we're fans of Kathy. I mean, it depends, right? I think if you think there is that opportunity there, clearly it's been hit hard, and those are some of the most loved things that we've seen in a long time of what happens. But the sentiment's low. I mean, I did have another chart about sentiment. I mean, sentiment is obviously very low, rightfully so when you turn on TV. But there's some opportunities there, and what is unique, you think about Kathy, you think about Bitcoin and some of those things as this week, right? What is Bitcoin? What are some of these coins done? Well, they've held in there pretty well relative to stocks, which is obviously sold off. So maybe there's something there, and I get it. People say, well, maybe that's because the banking world is got some major trouble, and this is why Bitcoin was created. I have no opinion there. I just know that the relative strength is there. But I can tell you this much, guys. This is interesting. I should have pointed out. So S&P's been down every day this week, right? If we're lower today, that'd be down every day, all 5 days, Monday through Friday. You got to go back since when? Since the last week of February 2020. We saw all 5 days of the week lower. Let's remember what happened back then.
Wow.
But, and I know we've had 5-day losing streaks, so I'm just, randomly at different days. But still, to be lower all 5 days of a week is fairly rare. We haven't done it in May since, or this is the longest losing streak to start May since 2012, down 4 days in a row. So, we'll bounce eventually, maybe even today. But again, back to Kathy. Yeah, there's some opportunity there, I think, because a lot of people don't want to touch it. For a longer portfolio, there could be some opportunity there. And honestly, if risk comes back on, that's probably the stuff that you doesn't necessarily lead, but at least stop going down, right? You want to see that from those areas, and that'd be a nice sign.
Okay, S&P's just sprinted to a new high there. Haven't hit the Globex high from Thursday yet. We went to 41.13. Just my last question from me. Obviously you have your bullish scenario here and the factors leading up to it with the Fed, especially if you get those Fed rate cuts. What would you say that, if someone just said, I'm not sure about the Fed. I'm not sure about this banking crisis. I think we're just stuck in a trading range. 4,200 is more the top of the trading range. I'm just going to, be trimming up here, and then just, inflation numbers don't come in. We get that dip back down to 3,800, 3,900. I'll redeploy. Right now, it doesn't feel that way. I mean, yesterday they took out the weekly low. They were ready. Okay, we're going to put the hurt in this market, and now we're right back around 4,100. What would you say to someone that's just firmly convinced we're just in a trading range, and if you're buying up here, you're buying too high?
Mm-hmm. I mean, I live in a little longer term investment world, I guess. So if we're in a trading range, that's great. Just use it, use it as an opportunity. We've got more time there. I mean, you guys talked about Apple before I came on earlier. I mean, look what Apple just had to say. I don't know. Apple doesn't sure seem like we're in a recession, right? Go to any Chipotle or anything. I mean, people are still out there spending money. So listen, yeah, we're in this trading range, and there's it's frustrating, I guess, for shorter term traders. But honestly,
Okay.
after the volatility we had, hey, we can live with it. We do think eventually we're going to break above 4,200. We came into this year saying the S&P would gain between 12.5% to 15%. So that gets us, a decent amount high. Well, about halfway there, I guess, if you look for the year approximately. So we still think there's some opportunity for an eventual upside breakout in stocks here.
Okay, we've been on the line with Ryan Detrick of the Carson Group, and Ryan, we know you had a rough couple weeks with the loss of your mother, but I've gone
Sorry
through
to hear
that
that.
too, and she'd be real proud of you, man. You bring it every day. You bring it to our show, and condolences here from everybody at PreMarket Prep, and just keep up the great work. And are we the only people that call you Statman? Or do other
A
people
couple
cry?
people on social media do, I guess, but in
Okay.
terms of like an interview, I guess so. Yeah, that's true. But I like it. No, that's kind of what I do. I try to show we've been here in the past. We're going to get through it. Now, believe me, it's not always easy, and the emotions run high. But that's what I try to do day in and day out. And also, if everybody's got a mom or dad out there, give them a call today. You just never know. When you can't do that anymore. So it's But thank you for the condolences. It's been an interesting couple of months, to put it mildly. But mom's in a better place. So thank you.
Okay. All right. Thank you, Ryan Dietrich, joining us here on Pre-Market Prep. Still a bid here in this market, Dennis. I mean, I did look at I haven't looked at the Fed tool lately, and boy, oh boy, July rate cuts. I mean,
I like what Ryan
is
says
May.
about the bonds, and I think and again, you got to be careful with which bonds you're buying when you got regional banks failing. But I do think that the rate raises, or I think the rising rates are gone. I do believe we're going to go into a rate cutting environment. I believe it's going to be a recession that takes us there. So I think actually, if you're getting long, and I'm like looking to try to extend out that duration here right now too, I think it's not a bad call. It's been a better call maybe a month ago, but I think you still have time here because these high rates aren't going to be here forever. So take advantage of them.
Oh, for sure, for sure. I agree on that one.
All right. So it's been a hell of a show. We got a lot more to go through and a lot more earnings stocks to talk about. Let's go ahead, and I'm going to pull Joe's charts down, and I'm going to share my screen, and we'll get to a little bit of some TradeZero time, and we'll keep rolling through some of these topics. Of course, the earnings, anything you guys want to talk about, throw it up in the chat. You guys also run the show. Let's get to it. TradeZero time. All right, let's go to Lyft. I want to take a quick little look. Of course, it's probably not on the net change up, but probably on the net change down, showing up. But let's talk a little bit about Lyft. We talked about Uber earlier. It was earlier this week, right? Uber? It was.
Yeah,
it was earlier this week, right? I just wanted to make sure. Lyft Q1 adjusted came in at 7 cents, beat the loss of 6 cent estimate. Sales of 1.0 billion beat the 981.42 million estimate. They do see Q2 revenues at 1 billion to 1.02 billion versus a 1.08 billion estimate. CEO David Rasher says that focusing on particular competitive pricing that increases our ride volumes. Lyft CFO said deterioration in the margin is driven entirely by lower revenue per ride due to pricing competitively. So, I mean, just to kind of put it out there, if you guys are looking for cheaper rides, maybe Lyft will have that cheaper ride as they're trying to battle back and get the volume.
I don't know what to say. I mean, this stock it's just a pig. I mean, yeah. I'll just give you my comments are pre-market low at 882, or excuse me, 882, and where you at? What's the all-time low? All-time low 819. So if you're stepping out here, that's where it's at. I mean, I have Uber on my phone. I don't have Lyft on my phone. Not
And the
that I
same
use
thing.
it. Yeah, I mean, I don't
I
use
use
it.
both. I use
Oh,
both. I'll tell
really?
you, the majority of people have both. The majority of people have
Oh,
both, and
really?
you'll look at. I mean, let's just be honest. You'll look at what's cheaper, right? I mean, if you could get a cheaper ride, it's the same thing. Let's just be honest. Lyft
But
or Uber,
But
it's the
Uber's
same
got
thing.
the name. Uber's been,
It
first
does.
to market here. Lyft has always been trying to catch up, and I think at the end of the day here, Uber's just a hell of a lot better company. So I'd rather own Uber. Wish we would have bought it 5 days ago and it was 30. It's now 37 here now, so gone too far. I'm not interested in owning Lyft, and maybe it comes back, and maybe it's going to be a bounce back. But again, I think I want to own best of breed here, so I'd rather buy Uber on a dip as opposed to buying Lyft on a dip.
All right, let's go ahead. Let's move out of Lyft. We did take a look at AMC, so let's go to Cigna Group. CI, you guys can see it on here, right here. It's up for a pretty good amount. Let's talk a little bit about their earnings. They came in at an adjusted EPS of $5.41, beat the $5.24 estimate. Sales of $46.52 billion, beat the $45.53 billion estimate. What do you guys think about Cigna as they move forward?
Defensive stock, although not very defensive lately. Holy, I don't
Yeah.
like the chart. Why the separation
Phew.
here? You think of Cigna and like, holy, what has happened here?
I mean, you just look at kind of UNH and
Yeah, but they not look like this.
Yeah,
UNH
they've
has
all
held up.
come-
I mean,
they've
it's
all come
off from the
down pretty
highs, but this
fast.
CI, this has been, a fall from grace like we haven't seen in a long time.
Yeah.
Wow, I did not know it was this low. I hadn't looked at Cigna for a while. Again, it's normally a defensive stock, and actually you can move opposite to the market sometimes. You got an ugly downtrend here now, though, and now you got the counter rally. Hard to get excited about this. I think you got major resistance up 255 to 260. Not buying it.
Yeah, good area. I'd even go 254.45. That's your 3-day high. And then 256.77 is your 4-day highs right there. That's your first potential area resistance up on 187,000 shares. Has it's decent volume for this higher price stock. But if I'm going healthcare, or if I'm doing something in this arena, I don't know if they're super closely related. I would look at what David Trainer talked about yesterday. That HCA Healthcare, right? Much better chart, much better numbers going forward.
Yeah.
So that's what I would do
Buy
if I was,
strength.
buy strength instead of trying to buy weakness. We know that doesn't pay all the time.
All right, I got one more earnings report to kind of go through. I got Warner Brothers Discovery Q1 EPS down from 69 cents year over year, now at a loss of 44 cents. Sales of 10.7 billion, missed 10.78 billion estimate. They did expect the streaming business to be profitable this year, earlier than expected. What was the ticker again for Warner Brothers?
WBD.
Thank you. Appreciate that. I'm having a little bit of a brain fart this morning.
That's all right.
But definitely, of course, Warner Brothers Discovery is adding Discovery Plus content to HBO Max and relaunching the service as Max later this month.
I just want to take it back to Paramount.
That's what I would have been long into this report. Just
look at Paramount and WBD, obviously, not getting hit like Paramount was, but that was like a shellacking of all shellackings. Here's Paramount that was sitting up not too far from its yearly highs. Obviously way off of its all-time high, but it had bounced back. And just like that, one report gives the entire year of gains back on one day. Boom. Down. I was like, and I had the pair on here, and I do have a little bit of a pair here on Paramount, just for day trades, which I'll work out after the open. But wow, 16 good support on PARA, but that has just been the beats, and it's just this industry. I mean, maybe Paramount, WBD, I don't know. They're trying to get into streaming. They're trying to move ahead there because they know that's where everybody is going, but it's just the pain of getting there. WBD, similar situation here. Hard to catch the falling knife.
Yeah, it's scary. I mean, it's giving
is.
back half of the move, right? So already. So if you want to look buy it on stability, then you want to see it get it back above, halfway of the move, 12.5. But if you're just taking stabs at all these daily lows here,
Mm.
11.23 was a low. Oh, well, the next low was 10.73. Oh, the next low was 10.12. So not a lot to lean on. At least, for this one, if you felt like you missed the dip, buy the dip opportunity, maybe this would be, wait a day or two, see if you can put a couple lows, maybe finds a home at 11 and a quarter. Theoretically, and then it turns up. But yeah, it would have been hard to go into after watching Para yesterday. It would have been hard to take this one long into the replay.
Yeah.
Let's be honest, what gave Para the lift, it was the World Cup. Other than that, no one wants this. No one goes to Paramount Plus. It was just kind of more about
what do they
the
charge
World
for
Cup
that?
Gave the lift.
Do we know what they charge for that? I've
It's
never
cheap.
even
I think it's like $6.
I've never even considered
$6, $7
buying
bucks.
Paramount Plus.
That gives more than
what's
an answer.
on it.
That's that. I mean, you're gonna have kind of your classic kind of NBC stuff. You got some soccer stuff that shows up there. That's a little bit more.
Is
exclusive.
it NBC? Is it NBC?
Paramount is
Comcast is
It's Comcast, right? It's with
Comcast.
They do have soccer. They have some good shows that some people watch. I have seen some people. Yellowstone. This is it. This is the top.
I've heard of that one.
Yeah, that's the top show.
CBS.
Yeah. That's the top show.
Yeah, it's CBS.
No one needs this. That's my thing.
I don't
can
need
watch
it.
Yellowstone on Hulu. I can watch all the stuff that you can get on that on Hulu, and I can get other stuff. So, I personally would use probably Hulu to watch all that stuff. But hey, to each his own. If you guys are using Para, let us know in the chat because we definitely need to see who is using it.
Lisa and I were.
You're using it, Joel?
No. We were on vacation. It was like our first vacation after like the pandemic. I can't remember what the date was, and it was during the Masters. And I wanted to watch the Masters. And I'm like, in the place, the Airbnb we were staying in, like they just didn't have regular cable TV. I was like going nuts. And I'm like, I want to watch the Masters. And Lisa's like, well, you got to do this. And she spent all this time, signing up for it. And then as soon as, we left there and the Masters is over, we canceled it. So, that's
exactly what I just mentioned. Using it for a little bit of time for a sporting event and then canceling it. That's what I see happen often.
None of these companies are as good as Netflix.
Yeah.
None of them, including Disney Plus.
Well, let's be
not
honest,
even
dude.
close to Netflix.
Netflix took a while to get to what the level that they are, right? It wasn't like they first got into streaming and then just completely killed it. And I think that these companies are going to take a while.
Netflix was the steal back at like 175, 180. When it got down to a P of 16, 17, Netflix was the steal. Now the P is, I think, over 30, and it's come back up. It might even be higher than that. But like at 290, I wish I talked about under 300 rebuying this, and I still think Netflix is still going to be a buy in here at some point in time.
320.
It's going to help them. It's going to help them with the whole not sharing accounts too. I think people are saying that's going to hurt them, but I tell you, there's a lot of people in Canada that just had to sign up because you can't share accounts in Canada anymore, and it's like, well, it's $15 a month. I'll just sign up instead of like borrowing, from a friend.
All right, I got to hop here in a second. S&Ps are holding on to some nice gains. 41.13 is your pre-market high. I would like to see us get through the Globex high from yesterday at 41.18, and then things open up on the upside. On the downside here, I'm not looking like for a huge update. I like if the Bulls can just get a close back here over 4,100. You got a couple, weekly lows in the same area to lean on, and that just justifies another trading range. Anybody wants to join me with their Derby pick, email me, Joel at premarketprep.com, and I can set you up to join that. If you want to join the closing print today, I'm going to put the link in there, and also be tweeting it later on. Triple D, I will check up with you later on in the day. Good show. Mitch, feel better. Get rested up. Get ready for the weekend. And let's see, got exciting Derby coming up. Hopefully we'll cash a few tickets.
Have fun, Joel. Have fun. Definitely stick up with Joel to kind of check out on that on the closing print. Of course, that's on Pre-Market Prep's channel. If you're looking for that a little bit later, it's not going to be on Benzinga. It'd be on their channel. Check it out, team. All right, let's go right back. The last one I wanted to bring up to you, Dennis, is AMD. What do you think about AMD today? Do you think that kind of outlook can really kind of push them forward with the Microsoft chip, AI chip?
Well, so this was a report from yesterday. Bloomberg was reporting that AMD is helping Microsoft develop its own AI chips. So But now you've got conflicting reports, and this is why AMD is down here this morning. We haven't got to this. There's a Microsoft spokesperson that's denying that AMD is involved with their AI chips, which is called Athena. So I don't know who's right and who's wrong here. And that's why AMD has given the majority of these gains back, because it popped up. You know, they get the headline, boom, Bloomberg breaks it. AMD working with and Microsoft, algos go buy, and they just ripped it higher yesterday.
Yeah.
That report, it sounds like it's being denied now. So I don't know who's right, who's wrong here, but somebody's saying that, you know, Microsoft spokesperson is denying that report from yesterday. So I don't know. I can't tell you if the news is accurate or not. I can't comment on any of that. All I can say is that the pricing action here, it's given back almost the entire gain that it got yesterday from this. I do like AMD on the pullback. The PE's a lot more attractive than NVIDIA. I liked it. I kind of wanted to buy it in that 81, 82 area. I thought about it and I didn't. I still think AMD going forward from here, if you're buying at 81, you got a 5-year time horizon, I think you'll be happy on AMD.
All right, guys, that's going to do it for us today. I hope you guys enjoyed the show. And definitely, I just threw up the link in the chat. If you guys want to get an extensive inventory of short locates, definitely check out, of course, TradeZero. Any last comments, Dennis, before you get out of here this weekend?
You're going to get more chop. Don't panic into anything. You never have to chase in this market. It's the market that seems to come back to you. So, you know, how we play chop is, you know, fading moves, the buying of the dips and the selling of the rips. I mean, AMD ripped yesterday and boom, it's right back down here. So you panic. You're like, oh, it's Microsoft, got to buy 90. You're at 84. You're like, what did I do? So just don't panic. Let the stocks come to your levels. Have your levels. Know where you want to own the stocks. Good companies at reasonable valuations at your levels. And that's how you make money in the long run.
All right, that's going to do it for us. Like always, keep up with Dennis Dick, Triple D Trader on Twitter. Give him a good follow, team. We're going to wrap up and bring you guys over, of course, to live trading. That's coming up next. Don't go anywhere, team. We got a lot for you here on Benzinga. We're going to bring you guys over to live trading, and I do got a great interview for you guys today. I'm going to be interviewing Trivago's CFO, and that's going to be coming up at 11 a.m. Eastern right here on Benzinga. So if you guys want to find out about the travel industry, or maybe you have the other competitors, right? Or a part of the group, Expedia Group. Of course, Trivago is a part of them. Last time I checked, Expedia owned about 60-something% of Trivago. I'm going to check in on that. But like always, if you guys want to find out a little bit more, come over to live trading. That's starting up next, and see what I can get into. I did take a shot on somewhat of an NVIDIA short with a leverage vehicle. Let's talk about that today. And of course, I'm slightly in the red. We'll find out how it trades. Like always, smash the like, team. If you want to find out a little bit more about our trading action, just stay right here and come to our trading stream. That's starting up right now.